Hi there, you're welcome to my channel today. Our topic for today is bank reconciliation statement. What is bank reconciliation statement? This is a document prepared by an account holder for the purpose of finding out the reasons for the difference between the cash book balance and the bank balance in order to make both balances to agree. There will be need to prepare bank reconciliation statement when the amount in the bank column of the cash book is not the same thing as the amount in the bank account. In such a situation, it means that the value in the cash book is not the same thing as the value in the bank account. Where does one get the information that one uses to prepare bank reconciliation statement? One gets it from bank statement. What then is bank statement? This is a document prepared by a bank for an account holder showing the details of transactions between the account holder and the bank within a particular period of time. This tells us that it is the bank that sends the bank statement, whereas it is the account holder that prepares the bank reconciliation statement. However, there may be some times that the amount in the bank column of the cash book is not the same amount as the amount in the bank account. Then there will be need to prepare bank reconciliation statement. Bank reconciliation statement is prepared by the account holder, whereas the bank statement is sent by the bank to the account holder to show the details of transactions that have taken place between the bank and the account holder within a particular period of time. What are the things that make the value in the bank column of the cash book to be different from the value in the bank account column of the account holder? That is what we shall see soon. I would also like you to understand the principle upon which banking is done. What I mean is that whatever entry you make in your cash book, the bank makes the opposite of that entry. For example, when you make a debit entry to your cash book, the bank makes a credit entry to your bank account. And when you make a credit entry to the bank column of your cash book, the bank makes a debit entry. Look at this. Assuming this is your cash book and this is your bank statement, which is the details of the transactions that you've had with your bank, say for the month of May 2023. Now, you received an amount of money of 4,000 naira from Jude, right? If you received it and you debited it, if the bank had also debited it, that would have been an error. So what do you think the bank would have done? The bank would have credited it. Also, you received 6,000 from Fine Limited. You received it and you debited. The bank did what? The bank credited you. So whatever thing you do, your bank does the opposite. That is the principle upon which banking transactions are operated on. And that is also something that you need to know. It is an essential thing that you need to know in this topic. Although, okay, it is simple as I've told you. You don't need anything to fear because we'll do a step-by-step approach to it so that you can understand the topic. And not just understand it, you understand it and teach others. Now look at this, Victor. You made a payment to Victor to the tune of 1,000 naira and you credited the amount. What did the bank do? The bank debited you. You would have noticed that you had 7,000 naira. Instead of you also having 7,000 naira here, what do you have? You had 11,500. That means that there is a difference in the figures. So when there's a difference in figures like this, the need to prepare bank reconciliation arises. That was what I was trying to explain initially. Okay? Now, you have this now. But what are the causes of this difference? What would have brought about, or what would have made the cash book, that is the bank column of the cash book, to have shown 7,000 naira and the bank account to have shown 11,500 naira? What would have caused it? We'll look at the things that would have caused this difference. I would also like you to note something. Look at this. This is your bank statement for the month of May. You would have noticed that whenever an entry is made to the credit side of the bank statement, that your balance increases. And whenever an entry is made to the debit side of your bank statement that your balance does what? Your balance decreases. For example, at the beginning of the month, you had 3,000 naira here. This is it here, 3,000. When 4,000 naira was credited to your account, the balance went up by what? 7,000. When 6,000 naira was credited to your account, 7,000 plus 6,000, it resulted in what? 13,000. Also, when 1,000 naira was deducted from your account, that means when it was debited to your account, what happened? Your balance went down by 12,000 naira. Also, when 500 naira was deducted from your account, what happened? Your balance went down by 500 naira, giving you 11,500. They will come to the technicalities of this later, okay? What I want you to do is to start from the elementary stage of this, then you will graduate to the higher stage of it. I hope my explanation so far has been understood by you. At this juncture, we are looking at the first 7 items that will make the balance of the cash book not to be the same as the balance of the bank account. Here we have reasons for disagreement between the cash book and the bank account. We are looking here, we have the effect that such a disagreement has. Then here action required. When you are preparing the bank reconciliation statement, what you are to do. Okay, this topic is easy. It only involves addition and subtraction and understanding the logic behind the reasons for the discrepancies. Okay, it is easy. You can learn it, and not just learning it, you can learn it and teach others. So the first item that we're considering is what? Unpresented check. What is unpresented check? Unpresented check is a check that you have given out to somebody that you were owing. Okay? And as you were owing the person to, or you were obligated to that person, that means that you would have credited your cash book. But the person that you gave it to did not present it to the bank. That is the situation of what? Unpresented check. The effect it will have on the cash book is that the cash book will have what? A lower balance. The bank statement will have what? A higher balance. When you want to do your bank reconciliation statement, what will you do? You can either start with the balance as per cash book, or you start with the balance as per bank statement. You cannot start with the two of them at once. You can start with either of the two. Now, in a situation whereby you have a choice, I will advise that you start with balance as per bank. I will advise that you start with balance as per cash book because it is easier. Okay? Now, for unpresented check, what do? You have to add unpresented check to the balance as per cash book. Then, if you are starting with balance as per bank statement, what do? You have to subtract unpresented check to what? You have to subtract unpresented check from balance as per bank statement. The next item that we are considering is uncredited check. What is uncredited check? Uncredited check is a check that you have received and debited to the cash book, but the bank did not credit it or did not record it to your account before sending you your bank statement. Because you received it and debited it, what is the effect on the cash book? The cash book will have what? A higher balance. The bank statement will have what? A lower balance. When you are starting with the cash book, what do? You have to subtract it from the cash book. And when you are starting with the balance as per bank statement, what do? You have to add uncredited check to the balance as per bank statement. So balance as per bank statement. Now the next one is dishonoured check. Dishonoured check is a check that the bank has refused to honor. Why? Because it might have been mutilated, or the amount of money you wrote on the check is higher than the amount of money you have in your account, or for some other reasons. Now, when such a thing happens, your cash book will show a higher balance, right? Your cash book will show a higher balance. Then your bank statement will show what? A lower balance. When you are starting with a balance as per cash book, what do? You will subtract dishonoured check. And when you are starting with balance as per bank statement, what do? you have to add dishonoured check. The next is bank charges. When the bank works for you, the bank charges you. I don't think this is difficult to understand. When such a thing happens, it might be that you were not aware of these charges before the bank statement was sent. Because you were not aware of it, you did not record it. So what happens? The effect on the cash book is that the cash book will show what? A higher balance. The bank statement will do what? Will show a lower balance. Okay? Then if you are starting with balance as per cash book, what do you do to bank charges? Subtract it. What do you do to the balance as per bank statement if you are starting with it? How will you treat bank charges? You have to add bank charges to it. Standing order. A standing order is an instruction that you have given to your bank to carry out a particular assignment on your behalf. A typical example of a standing order is the payment of insurance premium. There are other standing orders that you can give them, okay? Now, when this instruction has been carried out, you might not be aware. So, because you might not be aware of it, what happens? The cash book will show a higher balance because it's not recorded in your cash book. But the bank that did it knew about it, so they would have deducted that amount of money from your bank account. Your bank account will do what? Will show a lower balance. So what do you do now? If you are starting with balance as per bank statement, what do? You have to subtract standing order from the balance as per cash book. Then, if you are starting with balance as per bank statement, add what? Standing order to it. Okay? Now, the next one is what? Credit transfers. This is a situation whereby someone pays into your account without you being aware of it. Because you're not aware of it, it is not recorded in the cash book. So what happens? The cash book will do what? Will show a lower balance. The bank account will do what? Will show a higher balance. So in order for you to reconcile the cash book and the bank account, what happens? If you are starting with the cash book, that is the balance as per cash book, add credit transfer to it. Then, if you are starting with balance as per bank statement, subtract credit transfer from it. Okay? Then we have dividend. What is dividend? Dividend is the profit that you get from your investment in a joint stock company. If the bank receives this on your behalf, you might not be aware of it. And because you're not aware of it, what happens? Your cash book will show a lower balance. Your bank account will do what? Will show a higher balance. Then, if you want to reconcile the two accounts, what will you do? You have to add it to the balance as per cash book. If you are starting with the balance as per cash book, then if you are starting with balance as per bank statement, what do? You have to subtract it from balance as per bank statement. Having come to this point, please, I'd like you to pause, subscribe, comment, then share the video later. Are these the only causes of discrepancies between the balance in the cash book and the balance in the bank account? No, there are others. But as I've told you, we are doing a step-by-step approach of this topic. I want you to understand this topic. So we'll start from the lowest, then we'll graduate to the highest. So for now, these are the items that we are considering. When we start solving questions, you will get to understand better. Okay? Now, the format. This is the format. As I told you earlier, you can either start with balance as per cash book, or you can start with what? Balance as per bank statement. When you are starting with balance as per cash book, this is the format that you will use. So you write the name of the business, you write bank reconciliation statement as at you date it as at 31st May 2023, for example. Okay? Now, you write balance as per cash book, you write it here. Then you have to add unpresented checks, dividend, and credit transfers. Why would you do this? You would do this, you will add these items to the balance as per cash book because you would have noticed the effect of these items on the cash book. What were the effect of unpresented checks, dividend, and credit transfers? What were their effects? See their effect. See their effect. Their effect for unpresented check, this is it. It made the cash book to appear lower than normal. Okay. Then for credit transfer, it made the cash book to do what? To appear lower than normal. Also for dividend, it made the cash book to appear lower than normal. So the items that made the cash book to appear lower than normal should be added back to where? To the balance as per cash book. That is one logic behind the preparation of bank reconciliation statements. You can see that it's easy. Then these items will be deducted from the balance as per cash book. What are they? Uncredited checks, bank charges, dishonoured checks, and standing order. Why would they be deducted from the balance as per cash book? You would have noticed that these items made the cash book to appear higher than normal. So because they made the cash book to appear higher than normal, in you reconciling it now, in you reconciling the cash book with the bank account, what will you do? You have to subtract these items. This is it here. See, uncredited check made the cash book to do what? To appear higher. Dishonoured check made the cash book to do what? To appear higher than normal. Standing order made the cash book to do what? To appear higher than normal. Okay, so these items that made the cash book to appear higher than normal will be deducted from the balance as per cash book. Okay, now in case you don't want to start with the balance as per cash book, or it might be that the examiner has not given you the figure of the balance as per cash book, you have no choice then than to start with what? Balance as per bank statement, except you want to find it out another way. So when you are starting with the balance as per bank statement, what do? This is the format when you are starting with balance as per bank statement. You add the items that you deducted when you started with balance as per cash book. Those items that you deducted will be added to the balance as per what? Bank statement. You must remember that whatever thing you do, the bank does what? The bank does the opposite. So the items, these items, uncredited checks, standing order, bank charges, and dishonoured checks were all deducted from balance as per cash book. Okay? This is here. They were deducted from balance as per cash book. Now, when you are starting with balance as per bank statement, you have to do the opposite. You have to add them to balance as per bank statement. You would have also noticed that unpresented checks, dividend, and credit transfers were what? They were subtracted. Sorry, they were added. Unpresented checks, dividend, and credit transfers were all added to balance as per cash book. When you are starting with balance as per bank statement, what do? You have to lessen each of them. So when you start with balance as per bank statement, at the end of the day, the balance you have is what? Balance as per cash book. I hope it's clear to you now. Please, I would like you to subscribe to my channel if you've not done so. Also turn on the notification bell so that you will be a prime receiver of our content when they are uploaded. I would also like you to like this video so that it can go further than normal. Okay? I would also like to see your comment so as to improve on my videos. And I would also like you to share this video so that many people can know about this channel. God bless you so much. Let us take this first question. It says, on May 31, 2023, John's cash book showed a debit balance of 20,000 naira. His bank statement showed a balance of 23,450 naira. The reasons for the difference were as follows. A check for 1,000 naira from Uche was received and entered in the cash book, but not recorded, but not recorded in the bank statement. B, a standing order of 400 naira has not been entered in the cash book. C, checks for 2,000 naira were not honored by the bank. The following checks were drawn but not presented for payment. G, Ayo, 500 naira. K, Ade, 650 naira. And B, Bako, 800 naira. E, a dividend of 5,000 naira was paid directly into the bank. F, bank charges of 100 naira has been recorded in the bank statement only. You are required to prepare bank reconciliation statement as at 31 May 2023. Now, when you get a question like this, there are some things that you need to know. You need to ask yourself, what is the balance as per cash book? The balance as per cash book in this question is this, 20,000 naira. Then you also need to ask yourself, what is the balance as per bank statement? This is it, given. Then you can see you are required to prepare bank reconciliation statement as at 31st May 2023. Now that you have this here, you can either start with balance as per banks. You can either start with balance as per cash book, or you do what? Or you start with balance as per bank statement. The choice is yours. But as I've advised you, it is easier, in my opinion, to start with what? Balance as per cash book. Then apart from you noting these things that I've just told you, you also have to know what each of the statements means. For example, you need to know what A means. You need to know what B means. You need to know what C means. You need to know what D means. You need to know what E means, what F means. Based on this, you can then solve the question. Let us tackle the question now. So, the balance as per cash book is 20,000 naira. Balance as per cash book is what? 20,000 naira. Then let's go over. It says the reasons for the difference were as follows. A check for 1,000 from Uche was received and entered in the cash book, but not recorded in the bank statement. What do you think this is? This is what? An uncredited check. Okay, this is an uncredited check. But because it is to be subtracted from the cash book, what do? You come down and you lessen it. Less uncredited check. How much? 1,000 naira. Then the next thing, B, says a standing order of 400 naira has not been entered in the cash book. What do you do here? Standing order is to be lessened from where? Balance as per cash book. So standing order of how much? A standing order of how much? Standing order of 400 naira. Then the next one, C, checks for 20,000 were not honored by the bank. Of course, this is a clear case of dishonor check. Dishonor check. Dishonor check of how much? 2,000 naira. Then we also have the next. It says the following checks for D. It says the following checks were drawn but not presented for payment. Checks were drawn but not presented for payment. That would have been what? Unpresented checks. So unpresented checks are to be added. So unpresented checks, since we have more than one, you have to list them out first. Unpresented checks from G, Ayo. How much? 500 naira. Also from K, Ade. K, Ade. How much? 650 naira. Also from B, Bako. How much? 800 naira. So the total of unpresented checks, 500 plus 650 plus 800, the total will be 1,950. 1,950. We'll go back to the next one. It says a dividend of 5,000 was paid directly into the bank. Dividend of this amount was paid directly into the bank. What do you do to dividend according to the format that I gave you, starting with balance as per cash book? You have to add it. So dividend. Dividend is to be added. What's the value of the dividend? 5,000 naira. 1,950 plus 5,000 naira will give you 6,000 950. Then 6,950 plus 20,000 will give you 26,950. Then these items too that are to be deducted. Have we seen everything? F, it says bank charges of what? 100 naira has been recorded in the bank statement only. Bank charges should be deducted. Bank charges of how much? 100 naira. So lesson 3,500. When you remove 3,500 from 26,950, what do you get? You get 23,400 and what? 50 naira. So this will be our balance as per bank statement. Balance as per bank statement. Since we got this value, 3,450 naira, you can see that it tallies with what we have been given in the question. That is to tell you that we followed the normal procedure. Okay? Now, this thing that we have done like this too, we can showcase it, starting with the balance as per bank statement. We can showcase it starting with what? The balance as per bank statement. Let us showcase it now. Now, the balance as per bank statement, the value we had at the beginning was what? That is for the balance as per bank statement, 20,450. The items that were subtracted under balance as per cash book will be added here. So uncredited check, standing order, dishonoured check, bank charges. When you add everything, it will give you what? 3,500. Okay? Then add balance as per bank statement to 3,500. You will get 26,950. Okay? Sorry? Yes? You get 26,950. Now, deduct that amount from unpresented checks. Remember that when we're dealing with the balance as per cash book, these items were added. So in this case, you are not going to add them, you are going to do what? Deduct them. 9 unpresented checks, the total 1,950, dividend 5,000. So when you remove 6,950 from 26,950, what do you get? You get 20,000 naira. So this is the balance as per cash book. This figure that we got here tells you that we did the correct thing. I hope that you have mastered this particular stage. The topic is an easy one. Okay? It's an easy one. As if you have been following me step by step, you would have understood it by now that it is very, very easy. So this is your class work. This is your class work. You could pause the video and do it. Then continue watching later. This is your class work. The next thing that we are considering is the treatment of overdraft. What is an overdraft? An overdraft is a situation where your bank allows you to withdraw more than the amount you currently have in your bank account. The bank does this because you are their customer. In such a situation, you will find out that you have withdrawn more than what you have in your account. Now, when there is an overdraft and the amount of money you have in your cash account is not the same thing as the amount of money that you have in your bank account. When I say cash account, I mean the bank column of the cash book. If it's not the same thing as the amount of money that you have in the bank account, then you have to prepare bank reconciliation statement. There is a format that you can see here. This is a format for the treatment of bank reconciliation when there is an overdraft and when you want to start with the balance as per cash book. Now, you will not call it balance as per cash book. Instead, what you call it is overdraft as per cash book. When there is an overdraft, how do you treat it? When there is an overdraft and you are starting with overdraft as per cash book, what will you do? You add these items: uncredited checks, standing order, dishonoured checks, and bank charges. Why would you do this? You can see that this pattern is different from what we did when we started with what? Balance as per cash book. You will do the opposite when there is an overdraft and you are starting with overdraft as per cash book. On the other hand, what will you do? You are going to lessen these items: unpresented checks, dividend, and credit transfers. After you've done that, you then have overdraft as per bank statement. It is not compulsory for you to start with overdraft as per cash book. You can start with overdraft as per bank statement. This is especially in a situation where you are not given the value of the overdraft as per cash book, where you are given just the value of the overdraft as per bank statement. Or you may decide to begin with overdraft as per bank statement, even though you have been given the value of the overdraft as per cash book. As I often say, in this topic, it is always the best to begin with what? The balance of the bank account in the cash book. Okay, in my opinion, it is the best and the easiest. From my many years of experience from teaching this subject, I've come to realize that it is the best to start with whatever thing that has to do with the cash book. Now, in case you want to start with overdraft as per bank statement, when there is an overdraft, what do? You add unpresented checks, add dividend, then you add credit transfers. Remember that these items were deducted when we started with balance as per bank statement, where there was no overdraft. So here you will do the opposite. Okay. Now you lessen these items: uncredited checks, standing order, dishonoured checks. When you do this, you have overdraft as per cash book. Please, you are not going to have balance as per cash book. Please, you have overdrafts. You have overdrafts as per cash book. That is what you are going to have. Okay. Now let us see a question involving overdraft. Look at this question. It says, on December 31, 2023, the cash book of Victor Enterprises showed a balance of 5,000 naira overdrawn. So this OD means that the amount of money has been overdrawn. That is overdraft. While his bank statement showed a balance of 3,800. This OD means that it's an overdraft. Take note of it. It was discovered that the following transactions were responsible for the discrepancy between the two balances. Checks issued amounting to 220 naira was not presented for payment. Uncredited checks, 140, standing order with the bank for an insurance subscription of 330 naira was not considered. Bank charges amounted to 50 naira. Dividends of 1,000 naira collected and credited by the bank did not appear in the cash book. A credit transfer of 500 naira was not considered. You are required to prepare bank reconciliation statement. Let us prepare that now. So going by this, we begin by writing the name of the organization. That is Victor Enterprises. Victor Enterprises. Then let's head it bank reconciliation statement as at December 31, 2023. The symbol of the currency we're using is the Nigerian naira. There are two balances here. The balance of the overdraft in the cash book and the balance of the overdraft in the bank account. So beginning with this, overdraft as per cash book. The value of the overdraft as per cash book is 5,000 naira. Then add a check issued amounting to 220 naira was not presented for payment. This is a clear case of what? Unpresented checks. So less unpresented checks. Less unpresented checks of how much? Unpresented checks, 220 naira. B, uncredited checks. Add uncredited checks. What's the value? 140 naira. Then C, a standing order with the bank for an insurance subscription of 330 naira was not considered. So we are going to add standing order. We're going to add standing order. The value is 330 naira. D, bank charges amounted to 150. So we'll also add bank charges. Bank charges, 50 naira. When we are through with this, bring it here. Then 5,000 plus 520 equals 5,520 naira. Let's continue. Dividends of 1,000 naira collected and credited by the bank did not appear in the cash book. So what do we do here now? We will subtract dividend. What's the value of the dividend? 1,000 naira. It says a credit transfer of 500 naira was not considered. So credit transfer of how much? 500 naira. That wasn't considered. Add everything, 220 plus 1,000 plus 500. That is 1,720. Deduct this amount from 5,520. You have 3,800 naira. This balance that you have here should be termed overdraft as per bank statement. Overdraft as per bank statement. You can see it now. When we started with overdraft as per cash book, we ended up with the value of overdraft as per bank statement. You can see that the value that we have here as the overdraft as per cash book, sorry, you can see that the value that we have as overdraft as per bank statement is the same value that we have in the bank statement. This shows us that we did the correct thing. Now, we could have also started with overdraft as per bank statement. If we had done that, we would have ended with overdraft as per cash book value. I would like you to try your hands on that. Try your hands on that and see whether you get it. And I trust that you get it. In case you've not subscribed to this channel, please, I would like you to subscribe to this channel, turn on the notification bell so that you'll be a prime receiver of our content when they are uploaded. I also like you to like this video. At the same time, share it. I would like to read your comments so as to know how to do better in my subsequent videos. I would like to give you a question now that I would like you to try your hands on. You can try this question now. Try this question and you can see it now. You can see it starting with the overdraft as per cash book. Starting with overdraft as per cash book, don't mind what is written here, starting with cash book balance. What I mean is overdraft as per cash book, starting with this. Also starting with overdraft as per bank statement balance. Okay? Do it and see how it goes. I would like to read your comments in the comment section. This is where we'll wrap it up with this video for part 1. Watch out for part 2. Okay? Watch out for part 2. In the part 2, I'll bring bank reconciliation to an end. And in the part 2, that is where we'll solve some of the toughest questions. And that is where I will teach you some things that I didn't teach you here. As I've told you, I want the video to be a step-by-step approach so that you can understand it very well. Try your hands on some other questions. I also want to implore you, please, about the Christian faith. If you don't have a relationship with the Lord Jesus Christ, please, I would like you to call him into your life. A life that does not have Christ in its center is meaningless. God bless you.